Hi there, and welcome to Finance Focus with Andrew, a platform here we engage in conversation that endeavor to enhance our financial literacy, to educate each other together. Now, welcome to this live session. This is yesterday Authority Quarter 2 2025 report based on the information. It is said that data itself is not important. It is what you get to do with the data that makes it important. So even if the Capital Market Authority informs us how the different fund managers are faring, and we do nothing about that information, that data will not make any sense to us. But it is what we do with that data that makes it important. It is good that we get to go through the report, get to see how the different fund managers are doing, and we get to make decisions out of that. Now, in the area session or in episode 1, we did an introduction of what the corrective investment schemes are. We looked at the different fund managers, the market share that they hold in the corrective investment schemes market. And of importance is that we see there are different investment schemes, but majority of us only know of the money market fund. That is the most common. That is the most common corrective investment scheme. But we said that we have other types of corrective investment schemes, which include fixed income, include fixed income. We have the special funds, we have the balance funds, we have the bond funds, we have the equity funds. All those are different types of collective investment scheme, and that is what majority of us know. Majority of us are only aware about the money market fund, but there are other types of corrective investment schemes. And welcome aboard as we continue to analyze the report. So I welcome you aboard, and I hope you get to learn something from the either the growth or deterioration. Uh, the title reads, I hope you be able to see my screen so that we can be able to read together. And the title reads, Assets under management at 31st March 2025 to 596 billion fair. How did the specific managers perform? That is what we are interested in. And you can see that the Capital Market Authority has provided us with a table that is showing us how the different fund managers fared, but also in terms of some funds has gone down in terms of asset under management, and we will be able to 26%. That is from an asset under management portfolio of 90 billion to 113. CIC grew by 7%. So we experienced a downward trajectory. And I'm trying to check some of the fund managers that I can see the fund manager that experienced the most growth. So far, I have seen FIDA Unit Trust Fund. They grew by 112%. That means that their fund grew by more than double, which is nice. We also have the Mayfair Unit Trust, 1%. That is quite commendable. But if you see your fund manager growing negatively, that should give you a reason to do a deeper research to understand what they are doing. It is important to check on them, to check on what they are really doing. An example of this is this particular unit trust that I have pointed out, the Genghis Unit Trust. Many of us know that Safaricom launched ZD Money Market Fund that is doing quite well, as we observed yesterday. we saw that they have managed to correct around 10 billion in 6 months' time. So before the creation of ZD, we had Safaricom and Genghis, and they kind of had a dispute that even saw Safaricom opening a separate money market fund. So you see, Genghis is growing negatively, and about thinking about it deeply, we remember that they had a dispute with Safaricom, which resulted to Safaricom creating ZD Money Market Fund. That's why I'm saying, even if it's the management, it's not a strong reason to prove that a fund manager is not doing well. It should give you your fund manager and just try to see whether they grew positively or they grew negatively. So the other thing that I want us to look at is that the different asset classes that the money that was invested in these corrective investment schemes were invested. Now, in quarter to 2025, 41%, that is 224 billion of the total assets under management, was invested in government securities. The government securities include treasury bonds, treasury bills, infrastructure bonds, and euro bond. The least amount of assets under management at 0.2%, that is 1.5 billion, was invested in offshore unlisted investment as shown in the table below. Now, you see, when these fund managers collect your money, they are not going to stay with the money. So this money is going to be invested. So they don't stay with your money. So they go invest this money, and so that they can get some return to give back to you. So this particular page is showing us where this money that they collected from you was invested, or are they complying to the regulator that they get will not go the market? You can see that the biggest chunk as issued by the government of Kenya, majority of this money is for money market fund. It ought to have been invested in treasuries which are short term. So that is 41% of the money was invested. So even if you hate money market fund, government security is one of the investment option that you can consider as an individual. Fixed deposits, these are issued by the bank, but remember, uh, these are fund managers that are talking about shillings. They are not talking about thousands. So even if they approach a bank for a fixed deposit, they have the power to negotiate for better interest rate. If you approach your bank fund manager who is talking about 20 billion, the bank will be forced to give them a rate because maybe another competitor will give a better rate, and they will take the business to the competitor. So that is another essence of the corrective investment schemes. Once the fund managers, once the investors bring the money together, they have that negotiation power. They can be able to negotiate better better deals. Now, the other amount was invested in cash and deposits, offshore listed investment. These are shares of companies that are filed outside the Kenyan territories. Unlisted securities. These are companies that are not listed in the stock exchange. Listed securities, companies that are listed. These other corrective investments, it's like they also go to invest in other investments that are of the same setup, and also offshore unlisted securities. So even if you are not you are not someone who likes money market fund, you have an option of investing in these things directly. You can do that yourself. Now, let's get to down the report further. That is the same information that have been presented graphically. Now, here is another piece of information that is quite important so that you get to understand, you get to see how the corrective investment market is doing and where the market is really going. Now, the performance of the dominant funds. The most dominant funds among the approved CIS funds are the money market fund, equity fund, fixed income fund, balancement channel. Special fund have gained popularity among investors. Underline that point, that special funds have gained popularity among investors at 372 billion, representing a 62.5%. The money market fund is preferred by investors because it's a low risk investment channel. Special fund comes second at 113 billion, representing 19%, closely followed by fixed income funds at Kenya shillings 105 billion, representing 170. Uh, my take on this is mainly on, you see, the money market fund is the most popular collective investment scheme. And this is simply because, number one, talking about maybe in the social media, maybe where you try to source for information, you probably find someone talking about money market funds. But now we have talked about money market fund for close to 2 years, and I think it's time we get to think and do something different. Now we need to think beyond having a money market fund account. Now, after you have a money market fund account, what next? Now we have also experienced a trajectory of decreasing interest rates because the money market fund interest rate is majorly determined by the interest rates of the treasury bills, and we have seen them go down consecutively. We have seen them go down since end last year, 0.000%. It means that another minor drop takes that interest rate to a rate that is below 8%. So we can see that the interest stabilized, and you see, as far as the interest rate of treasury bills keeps on down, so it is at this point that people are getting used to the money market fund returns. And these are the people that are falling on the hands of the special funds. And that's why we can see, despite the special funds not being so many, they have managed to take position two, taking 19% of the collective investment market. So I believe it is time that we now get moving from money market fund. You have already set up your money market fund. You have an emergency fund put in place. It is time you start doing something extra. It is the high time you start sourcing for better returns, and the immediate place that you are likely to fall is in special funds, where you will be able to get better returns. But also keep it at the back of your mind that when you talk about special fund, now you have moved from a low risk investment to a medium risk investment. So it is important to remember that as far as you are chasing returns, you also need to think of the kind of risk that market fund are restricted to invest in low risk. Special funds are even able to invest in offshore offshore markets. They are able to invest in commodities such as gold, such as petroleum. So their risk is higher, and their range of investment is higher, and that's why they are able to derive market fund. So the other one is the fixed income fund. And as the term dictates, the fixed income fund is a fund where you get a fixed interest. We know that we don't have guaranteed returns in both money market funds, in special funds. In money market funds, rates change on a daily basis. So in quarterly basis, and they are not guaranteed. But for fixed income fund, you are telling a fund manager that for me, I need a return of 9%. whether you make profit or not. So that is what we call fixed income fund. So equity fund is a type of collective invested in equities. So it is invested in equities. It is invested in stocks. So have it at the back of your mind as you go for equity fund. Remember, be invested in stocks, and stocks are higher risk. Is stocks are in a higher risk category as compared to where we were in the money market funds. So as you go up, as you go looking for other correctives higher, so make sure that you understand the risk of collected from investors is invested in two major things. It is invested in stocks, and it is invested in government securities. So the two of them, that is why it is a balanced fund. It is a and government securities. So that is just to show you that we have quite a number of collective investment schemes, not only the money market fund. And it's just that the money market fund is the most popular. But if you already have a money market fund, think of exploring that as you go up. If you move to a space, it means that you have accepted a higher level of risk. Now, we also get to see an analysis of how each of the funds performed. We will not dwell so much into this. Of course, we can see that the money market fund is at the top because it is the most popular, it is the most common, and we can again see the market share of the money market fund Sandram has the biggest fund. That is 92 billion, 24.9% of the market. Like the quota of the money market funds belongs to Sanlam Money Market Fund. CIC 23%, ABSA 6%, ICA 5.4%, KCB 4.2%, Britam 3.5%, Etika 2.8%, and ZD 2.7%. So we can see that ZD is the 10th biggest money market fund in terms of assets and management, and they are just can say a few months old. This baby called ZD is about 6 months old. So they are really doing quite well. And I said ZD is doing well for two reasons. The brand that they are riding on, that is Safaricom, and the convenience of opening a ZD money market fund. You only need to have your M-Pesa app and just click one button, and there you have a money market fund. But the kind of results ZD is posting, I'm not sure whether the growth is sustainable. I don't know whether the kind of results they're posting, they will keep attracting more people, but that is a conversation of another day. So let's move on to another time. Move to that. I don't intend to make in. There are some funds down here that even if you get the percentage of their market share, we cannot be able to assign them a value. They still have a 0.0%, and I don't think that that's will these fund managers be able to take advantage of the market? Do they have the ability to negotiate for deals? So if your money market fund is down here in they have a 0.00% of the market share, maybe time to think otherwise. So for the fixed income funds, at the top we have NCBA fixed income fund, followed by Britam. You can check all these and get to see maybe you are interested in having some fixed income, so you can check and see which has the best services, which has the majority of the people. ICA is the leading one. Old Mutual. A lot of people are not into these things because when we talk about the best equity fund having an asset under management of 1 billion. It means that people are not so much into them, and maybe it is where we have the few people that things are better. And balanced fund seems to be even worse. ICA at the top, but with what? With 392 million. We are talking now about million. So uh, maybe it is these funds that maybe we have to check, and maybe that's where we can fund. The special funds asset under management reported a CIS market share of 19%. Further, among the special fund, Answer X had to be at the top with 57%. That's crazy. I see we have around, hey, we have Mansa X is the giant, and that is when you talk about special fund, you cannot talk more than X. We can see that it has the biggest market share. It is managed by the Standard Investment Bank, and that is where people are running. Another special fund that is quite a bit popular is the Ox Special Fund that is managed by Faida Investment Bank. But you see, we have some more special fund. So if you already have a money market thinking of something else, start thinking of something else. But the special funds, you find that X you need to have 250,000. So that's again limits a lot of people. The minimum top up amount is 100 with a special fund. You might be forced to start with a money market fund, even if the interest in money market fund is not so attractive. You might be forced to start from there as you come climbing up the ladder. I know for the Ox Special Fund, their minimum investment amount is 500,000, if I'm not wrong. So you see, maybe not many of us might be forced to invest first in a money market fund, then come up with enough funds to dive into the special funds. Now, I think up to that point, we also have dollar-denominated funds. In case you earn your salary in terms of dollars, you can think of keeping your emergency fund intact in terms of dollars. You don't have to convert to Kenya shillings uh, for you to be able to invest to set aside your emergency fund. We have 32 dollar denominated collective investment schemes. So you can choose a point. I think I have pointed out things that I would think that they are quite important. And my closing remarks of this call or of this review would be one. Number one is that whether you fight or accept money market fund, uh, this report shows that people are moving into collective investment schemes. We are talking about a growth of 100 billion in April, May, and June. So whether you see people fighting money market fund and other collective investment schemes on the social media, know that those are emotional attacks, and a lot of people behind the scenes are moving into money market fund every day. Instead of having your money in a bank account, earning you zero, even being charged uh, a monthly commission to store your money, think beyond that. Have that money in a money market fund. Even if they give you an 8%, it is way better than a 0%. That is my take home point. Number one, that people are moving into collective investment schemes. People are out here looking for passive income avenues, but they are fighting the same avenues in the social media. My take home point number two is that we have seen years. It is good people are becoming more and more aware of this collective fund. that is discussed by everyone nowadays. Now, if you already have a money market fund, a money market fund is not an end goal. I would say that a money market fund is just a beginning. So if you have a money market fund, think beyond, think to stocks. And if you don't have the knowledge of doing it alone, go through the equity funds. Think of how you can go into government securities, even if you don't have the know-how of doing it alone, but that is quite simple. Let's say, let's not talk about knowledge. Let's talk about, even if you don't have the financial power, try to go through the balanced funds. So money market fund is not the end game. Money market fund is just a beginning. Money market fund is just a glorified bank account. Instead of having your money lying idle in a bank account, have it in a money market fund. But at the back of your mind, make sure that make sure you know that money market fund is not an end goal. It is just a beginning. And we have seen the various the various schemes that you can get into: the special funds, the fixed income funds, the balanced funds, and the equity funds. So we'll keep engaging more and more about these corrective investment schemes. Thank you for watching this session. In case you are new here, you can subscribe to the channel so that you get notified anytime we get to discuss a new financial tip, anytime we get to upload a new video. We have discussed a lot of these things in this particular channel. I have a playlist of about money market funds. So in case you're hearing about money market funds for the first time, just go to this same channel and search a playlist with over 20 videos on money market fund. I have done. I also have a playlist with special funds, so you can check out it. You can check it out. I hope I also have a playlist on treasury bonds. If you want to learn about government securities, I have a playlist on treasury bonds. I have another playlist on treasury bills. And in case you have any question about anything that I have discussed on this channel, feel free to ask these questions. It is these questions that bring new video ideas. So be sure that I will address all your questions. So subscribe, turn on the notification bell so that you get notified anytime we get to post a new financial tip. Otherwise, until next session, stay financially woke.